Hey guys, it's Ricky with Techbud Solutions. So today is another Sunday stock talk. The reason I can't do it later tonight is we're hosting an event and it's for Dream Cars of ASU, and it's with Mercedes of Scottsdale, Sandrina being the sponsor. And that's going to be hosted from 5 to 7. And I just didn't want to rush it and have to come back home and then give you guys just a Sunday stock talk that isn't very helpful. So I just decided to do it today in the morning at 9 o'clock, and I'll re-upload the link. So you guys will have access to it right now, and then re-upload the link later tonight as well. But if you guys are in the group me, if you guys are on the Facebook, if you guys have my number or have any links to my social media, please feel free to message me if you have any specific questions that you'd like me to focus on. So pretty much I'm going to be talking about a couple different stocks, a little update on the market, and just my best practices and my mistakes this week. Just so we can you're good, man. That's our roommate. So let's go ahead and get started. So I'm going to start sharing my screen. I'm just going to get right into it. So we're going to be doing technical analysis. These are just my analysis on the market, and to have a better understanding on what we usually wait for it to bounce off of. I'll talk about my trade for the week, and then one bad trade, and then one mistake I made that I didn't know that was possible. And that's pretty much my mistake that I'm going to talk about, and I made that actually through Robinhood application. So let me just go ahead and get started. I'm going to start sharing my screen. All right, so pretty much, if you guys don't know much about Techbud Solutions, so it is a free group you can join on Facebook. Right now, we're sitting right about 245 people with a couple pending, and Facebook is pretty much where we do some posts and where people can ask questions. GroupMe is really where the active traders are at. So let's see if we could. It is just a bunch of messages, especially when the market is open. You'll probably, if you're in the group and you don't open the application, you'll probably see 500 to 600 messages by 1 o'clock in the afternoon, just because we're constantly asking questions. So now we've designed a couple different just groups. They're all based for TechBuds, but this is just the general chat. This is the technical analysis chat. So and then we have the pre-market mover chat. And then I have a couple different chats with just different members, but then this is like a market mover and stuff like that. So ones that are kind of with high volume in the morning and that are picking up analysis feeds. So we do a couple of, as you can see, like just how stocks are doing, safety nets and resistance levels. So it's a really great environment overall. I feel like these chats have been pretty helpful, and we just make sure we focus on one specific chat. Just in case, like let's say you want to talk about just a general question, you wouldn't be using the pre-market mover chat to talk. So let me go ahead and get into this. All right, so mankind. Let me go ahead, and when I do my technical analysis, I'm using Fidelity as a technical analysis. I do have a brokerage or an IRA with them. They are the ones I use with larger trades, especially when my day trades are because you only get 3 so you get 3 day trades in a 5-day period, 5 business days. So once I'm out of those through Robinhood, I could use Fidelity or TD Ameritrade. So pretty much I want to talk about this as it's hitting a 52-week low. So if we see here the lowest it hit, and again, look where the L is. This is the lowest that it's ever hit. The low is around 65 is what I see to be the lowest, or maybe 64.26. So we'll go by that. Right now, the current price is 69, so it's getting close to that safety. It hit lows of 68, and now it's at 60. It picked up to highs of 86. Yep, almost 87. And it's starting to drop back down. So getting a little bit closer, just understanding that there was an old safety net at 60, no, 6 cents or 65 cents essentially. We get a little bit closer and we do a little analysis and see how the stock is doing. Again, we're day trading, so we only hold for a specific or for a number of minutes or hours. We definitely don't want to hold this overnight, as you know how volatile it can be, and continue to drop down. So one of our three rules is only trading stocks that have 10% potential. You ask yourself, does this have 10% potential? Based on this, it looks like it bounces off 67. That doesn't mean that you should be buying in at 67 cents. Because obviously, if we saw the 52-week low being at 64 cents or 65 cents, losing those 3 cents is about a 5% loss. If you're trading with $1,000 to $2,000, you're essentially losing either 5%, so you're losing either 100 to 50 to $100. So it really depends on on how much you're willing to lose. You should always understand, how much you're willing to lose and setting a stop loss. But you want to make sure that you're buying it when it's picking up. So you might not catch it at the lowest point, but at least you're catching it and you're selling at the green. And that's the whole idea of trading. It's not always trying to catch it at the lowest point, but being able to ride it up and then secure your gains. So what I'd say is watch out for the break at 67 or for the bounce at 57. Although this is a critical point, so if it does go below 67, just know that it might start dropping to 64 cents, as that is a 52-week, low. Always when you're buying a stock, you should understand where you're going to be selling. So if you're buying at 67 to 68 cents, if it starts picking up, where do you want to sell? Well, based on the history, it has an old safety at around, 80 cents. So that's one resistance level, but that necessarily isn't your 10% gain. So what you can do is, obviously it struggles to go above it sometimes, as it did last time. But if the volume is just right, it could pick back up, and then it has a new resistance right around the 72-cent mark. So if you can pick it up at 67 to 72, right there you have about an 8 to 9% profit margin. And with that, you kind of have to kind of do your own analysis and see if that's something that you think you could do within a day. Obviously, it has gone, within the day of trading from 67 to 72. But also, there's been days that it's kind of just plateaued the whole day. So you want to make sure that you don't just buy in at a point and just ride it through and then have to sell at that same point, because now you just wasted a day trade. But there are different levels of trading. So this would be level 1, essentially, from 67 to, I don't know what that says. I think that's 69. And then from 69 to 72, that would be level 2. And then from 72, you could see the slight resistance right about here at 75 cents, as you know, right there. And then it struggles to go above 75 cents there as well. So just understand to make sure that you're buying at the low points of the safety nets and selling at the high points of the resistance levels. So that's my analysis on Mankind. REX is one, and this is what I want to talk about when it comes to the market. REX is not one to hold very often below 55 cents. And the thing that scares me so much about REX right now is that it's been holding below. The 52-week low, so the 1-year low for REX is 48 cents, and it's hit that once. It usually doesn't hit 55 cents too often, but now it's trading below 55 cents. So understanding that the last day I traded REX was when I bought in around 52 cents and then sold it at 55 during that spike. It's been dropping below. It hit lows of 49 and started picking up, and it's kind of just plateauing and bouncing from the 45 and 49 and a half to 52 cents. So that's not your 10% that you want to shoot for. So what I'd say when it comes to trading REX, you want to make sure that the volume is right, because if the volume really isn't there, if it's not abnormally high, I would kind of say stay away from REX and make sure that the volume is in your favor, that people are holding and people are wanting to buy, and not people are selling, and then that's why that volume is high. So just by understanding that, I'd suggest try to catch it at the low point. So I'll talk about the little levels of resistance. But yeah, it's been weird. The market overall, doesn't really affect us since we're day traders, so we shouldn't be holding overnight, at least for myself. But yeah, a bunch of stocks. I remember we did one in the analysis that was really weird. It just freaked me out when we were talking about it. So it was an analysis, and it was just through the Robinhood application. I was just through the middle of the day, just talking and just running past it. And when it came to clicking on each one, that one, every stock after market hours were dropping. So let's see if I can. So, PTX was down, REX was down, NAVP was down. All these stocks after market hours, which isn't normal, just taking a dip after market hours, which was, and they're not just small dips, 3 to 5 to even 10% losses. And in the morning, they picked up essentially, but then they end up dropping back down, well, CIE used to have or I believe this is, yeah, CIE had it picked up, started trading around 38 to 125 for a while, and then just broke. Then it's a consistent spike down, and led to this being one of my trades that I cut my losses very soon on this one, and then the next day. This is actually one that we're going to talk about because I don't know if I have it in one of my lists. I do have it right here. So if we get a little bit closer to this one, just had a huge spike, and because we brought it up and because I started trading it, there was a bounce right at the low point of 82 cents, and everyone started buying in and locked in their gains at 72 cents. Some locked them in at $1, knowing that that was an old resistance level. But it was just amazing for other people being able to secure their gains. I was able to lock in 5% after I bought in, and just wanted to sell out and at least end up in the green because it had a slight resistance at 88 cents. But those that held a little bit longer throughout the day were able to, secure their gains but yeah, that's the main thing. I mean, the market, especially with the presidential election, tends to not. I mean, the U.S. economy tends to not do so well when it comes to us having elections, just because there's going to be a new president. And I know that doesn't make too much sense, but it's just what tends to happen. People are talking about there possibly being a correction soon, in the sense of the market taking a dip, like it did in 2008, and it happens to do so every 10 years. What I'd say, the housing market, in a sense, so how they kind of determine that is when interest rates begin to go up, that's when the market starts to take a dip, in a sense. And when the gas prices become too cheap, which in a sense they are it is very inexpensive for gas right now, at least in Arizona. Like all these different signs of the market possibly taking a dip, with just the housing market being at in a sense one of the resistance levels, and oil prices being so low, and just the presidential election coming up, and everyone there's been like little like memes, in a sense, or different messages from like investors that have been saying like that there might be a correction. But every so often, I mean, I feel like it's inevitable for there to not be a correction. I really don't think that the correction will be as big as it was in 2008, based on, kind of just of the fraud that was going in the housing market. I feel like, just like everyone else, like the U.S. economy learned from their mistakes. So if there is a correction, I wouldn't say that it should be as bad as the one in 2008. At least I wouldn't hope. But I'd say if you're an investor and you're a trader, try to be smart when it comes to the economy taking a dip. Most people don't know too much about how to invest, so when it does take a dip, it is bad usually for just the blue collar people or white collar people, in a sense of normal day jobs and stuff like that. But when it comes to investing, real estate is one of the best markets to invest in when it comes to there being a correction, since the housing market takes such a dip. And that's essentially what I'm waiting for. So I don't know if you guys heard, but I'm selling my GTR, and hopefully, if everything goes well, I mean, I deliver it within 2 weeks. And the reason for that is I'm just getting prepared, just preparing myself for something that could happen. It doesn't mean that it will. I was going to sell it anyways. But with this, now I have a little bit more money to invest in, just in case the market does end up taking a dip. So I would just say start, in a sense, saving your pennies and have something. I mean, when it comes to buying investment properties, there's a time that you're able to buy, a house that is appraised at, 150 to 200,000 now for, or during that crash around 40 to 60,000. I don't think it's going to take such a dip, or such a large tip. But if you can reach out to certain investors and you can do things like that, I'd say that's where you would benefit the most from the dip, and you just have to be smart about it. So now that we talked about that, let's get back into uh, trading. So let me go back into sharing my screen. But if you have any questions or any suggestions, please feel free to reach out to me. Again, I have my email down below, and then the link to the group me or our group. You guys can feel free to share. Okay, so I'm at REX. We already talked about EAGL. The reason I just wanted to bring up EAGL is because of there being. So let me just change the setting application. There being a slight safety net right here. As you can see that there's a safety net right here, it picked up, hit right here, picked up, hit right here, picked up. And although it doesn't look like such a big pickup, it actually is. So if we go into a 1 month analysis and do frequencies of 30 minutes, so each candlestick now means 30 minutes of trading. Once it picks up around from that, a little bit below that $6 range, it could go up to $12, essentially 100% gain. I'm not saying that it's going to do that. I'm just saying, buying at the low point, trade it up, secure your gains at 10%, and keep writing it up. Obviously, this happened within 1 day, but there were chances where you're able to buy low, sell for at least a 10% profit, buy again, sell for a 10% profit. This one kind of plateaued, so if you don't see the volume being there, then don't trade. Again, you want to make sure that you use your day trades according to when the stock has the most potential. So again, buy low, ride it up, and again, all these little, from 25 to 26, that's all within 1 day. 26 to the weekend, that was 1 day, and then that's essentially when it had the huge spike, drop back down, and it dropped down slowly, picked up, and then now it has, I believe, it's going to probably catch right around there. This being an old resistance level, now becoming the new safety net. So this is a critical point. So if it holds above 67 cents and it starts picking up, ride it up and secure your gains at 10%. But if it goes below 67 cents, I'd say set your stop loss a little bit below that, just because it's going to probably start going back down to the first level of trading, which is a little bit above $5. It's about $5 and like 40 cents. So this is pretty much my analysis on EAGL. It does have potential. Just make sure you trade according to the low points of the safety nets. DRYS, I do want to, and I'm sorry, I forgot who shouted this one out in our group. But they're like, look, you want to check this one out. I did the analysis and I shared it with the group. Unfortunately, I was trading something else. But I hope that whoever in our group shouted this one out, jumped on this one, because it went from 44 cents. It was at a 52-week low and picked up to 52 cents. And, that's great. So we're essentially seeing an 8% gain, which is a 20% gain overall. And I actually remember when it did that, it hit highs of almost 57 cents. So that's even pushing more towards a 30% gain mark. And it did that within a day. So it hit highs, dropped back down, and then the following day, jump back up from lows of 47 to highs of 57. So that's a 10-cent gain overall. Right now, pushing a little bit over 20% for that trade overall. So it dries. I'd say wait again for the safety net around 44 cents, and then wait for it to pick back up once the volume is right. GALE is one. It's at not a 52-week low, but it's just at a low point, and it had pretty good volume. I believe it was like 2 days ago. So let's go ahead and get into it. Yeah, the 15th hit lows of 31, picked up to 34, so that's 10%. Again, it's at 31.99. So just understand that this is a critical point, because if it obviously hasn't been doing very well, as it used to trade about 40 cents. It's been a consistent drop, so that's a lot of upward momentum. If we go to like year to date, it has been below when it first crashed from $2 down to here. It had the low point was 27.5, so that's the overall safety net. So just make sure that you set your stop loss, just because that's unknown area once it goes below that. So now that we can go a little bit closer, I'd say just trade according to the safety net and resistance levels that you set up yourself. So this is just going to be my little setup on the safety net being at 31 cents. resistance being at 4 cents as it struggles to go above 34 cents. And then once you start doing these little analysis, you see that it kind of sets up its own little levels of trading. So again, level 1 from 31 to 34. Level 2, as you can see, it bounces in between these from 34 to 38. And then level 3 from 38 to 41. And essentially, I mean, when you look and analyze GALE, it trades by 10% margins. So it's perfect when you want to lock in your 10%. So you can buy it at the low points, sell at the high points, you lock in your 10%. If it breaks this and it starts passing this, buy at the low points of level 2 and sell at the high points of level 2. If it breaks that again, of level 3 and then sell at the high points. And by being able to do that, you become more of a technical trader, and you lock in your gains, I think, or I believe in a smarter way than most people do. It's trying to write it up all the way. So you lock in your gains. If it picks up again and the volume is right, you do your analysis and you jump back in if that's the thing that you choose to go with. But Nugget is one that we actually called. This one really upset me because we literally called it at just the resistance and the safety net, where it was going to stop, where it was going to pick back up. So it had a safety net right here at 17. Oh, I'm sorry, let me go a little bit further back. Right here. So based on this, we saw that there's, if we go a little bit higher, actually we can go a little bit closer. So it had a, first safety was around 18. So for this, it looked like it was trying to catch at that, but it continued to drop. Caught at 17.17 and then picked back up, and then we're like, okay, well, where is it going to stop? We knew that this was an old safety, therefore this would be a new resistance level, and that's essentially went a little bit above it and then dropped back down again. But then again, look at what's going on from 17 to 24, highs of almost 25. So by understanding that, it hit like 24.97. By understanding that now it's dropping back down, and it actually did it. So if we go within a month and then change it to a 30-day frequency, it did essentially the same thing. It had the safety, it picked up right there. So this is the one that we're talking about that went a little bit below and then dropped back down. It was getting close, and then recently it hit at the day of the 15th, it hit 1760, if I'm not mistaken, around 1760 or 1750, and then picked back up. And by understanding that, I mean, there's different levels of trading, so you have to go under different levels of resistance. So by understanding that, based on the history, there's a resistance at almost 20 cents. You want to lock in your gains, and again, it hit right where that old resistance was, so we could actually go, I guess, a little bit closer, even more. It hit that same resistance level and then drop back down, hit that same resistance level, drop back down. And we called it every single time. And being able to ride it from 17 to 19 and a half, you're looking at 15 to 20% profit. So we're trading with $2,000 to $3,000. You're talking about a decent profit by something that necessarily isn't a penny stock, but you can do pretty well with locking in your profit to this. Even if you're trading with $100, 20% is 20%. That's $20, and you shouldn't be, if you're trading with $100. The thing that you have to realize is that you shouldn't be focusing on how much money you're making, but the percentages that you're making. Because if you can implement the same skills of that you're trading with $100 and you can continue to lock in your 10% profit, now when you start saving more money and implement the same strategies to trade, now you could be making $1,000, $2,000 once you're trading with $10,000 and using the same skills and the same concept. So with that is, I mean, trade according to the safety net. There's obviously a safety net right around here at the 17, and this is actually something that I was talking to one of my buddies about. So this low point right here was at 1760, and then this low point right here was at 1750, and then this low point right here was around 1740. So this safety net continues to drop, on average by 10% every time it determines a safety net. So if this stock comes back down 60, 40, 30, or 60, 50, 40, it hit like lows of 37. Your safety net here, I mean, based on the history, would most likely be around 1720 to 1715, based on what's been going on with the trend. So it's all about trends. It's all about what it's done in the past and trying to ride it back up. But definitely this does have 10% profit, so I'd say trade according to the safety nets and resistance levels, and then just set your alerts so you can trade according to that. So CIE, this one is a good one. So safety net at 82 cents. We actually were trading it when it was at like 85 cents, and it kind of just plateaued. So again, to not want to hold overnight, I ended up just selling and didn't make much on that one. Following day on September 16th, broke it, hit highs of $1. That's where a couple traders ended up. Some actually held overnight, which we don't recommend, but they're able to lock in your gain. So just know that that doesn't happen very often. It's been holding above at least the 90-cent mark now. So now it's trading at a different level of trading or different level of safety nets and resistance levels. So 82 to 90 was one, and then now from 90 to $1 is one, and then it goes by every 10 cents. But GEVO is also one that is at a pretty low point. So low point's at 48. It's currently at 47. So trade according to the safety nets and resistance levels being, right around the 47 to 49 cent mark and 49 to 51 cent mark. And, you want to make sure that you buy at good points. So not just at the lowest points, but it picks back up. So if you can get in at, 48 or, yeah, that is right, 46 cents, buying at that 46 cents and be, that 1% that buys in at the super low point, or just write it back up from when it starts picking up at 47, then write it up to the next, resistance level. TNXP is one that, let me show you this one. It's one I talked about, I believe, last week, 5 days, 10 days. It had a huge drop. So it has this gap to make up essentially, right? Right now it's trading at the 73-cent mark. This is one that pissed me off because I did not execute the trade to buy in, but Robinhood sent in my order and actually sent in the order right before the close date on Thursday. And it said canceled. And the following day, it submitted it automatically. And it set my limit to buy at 75 cents, which is not what I at all anticipated or even wanted to do. So I went ahead and gave them a call. They haven't gotten back to me. I sent them an email as well to see what we could do. But right now it's trading about 73 cents, but I definitely don't hold overnight, so it kind of pissed me off. And it bought at the high points, it bought at a critical point. So I bought the low points of level 2 of trading, but the high points of level 1 of trading, so 73 to 75 cents. So that really pissed me off. I mean, it's at a 52-week low, but no matter what, right? Even if it does take a big spike, they should not be executing on trades you didn't execute. You didn't execute yourself. But this one definitely has a lot of, I guess, a lot of margin to make up based on the 10-day analysis being right now trading at 75 cents. Possibly can go up to, the $1 mark. And then once it breaks $1.10, wait for that huge spike as we saw in CIE when it broke that certain safety net. And XCOM and others that have 100% potential for growth. Doesn't mean that it's always going to do it, but it essentially this is the next resistance level after 108, so it tends to have pretty big spikes, and then you'll see that when you look at just chats overall that based on the history, that's what stocks tend to do. But again, trade comfortably. For me, I really don't care about all that. I just lock in my 10% because realistically, that's what I tend to shoot for. LPCN has been one that's been picking up. Volume hasn't really been there, but it's been picking up. We usually buy at 330. Market again has been really bad, so it's hit lows of 325, which it usually doesn't. Actually hit lows of 320, which is really surprising. But now it's picking up. And it's actually trading at 362. So if it breaks 370 based on the history, it has the potential to go back up to that $4. Well, that was actually a couple months ago. The $4.50 after it broke 370 back then. So that's pretty much what we're waiting for, the break at 370. If not, then again, wait for 330, as that is a better buy-in area. But there's a couple traders that were able to lock in their 10%. And this is not a penny stock, so they felt comfortable holding this one overnight. But yeah, that's pretty much it. Thank you guys again so much. I know I went, oh no, that's 30 minutes of analysis. So hopefully you guys found this video helpful. If you guys want me to focus on anything else or have any questions, please feel free to reach out to me. You guys can message me on the Facebook, group me, or I'm on the Facebook page. You guys can message me if you guys have my number. If you guys have any of the group me applications or any of those, if you guys would like to join, there's a free group you can join. I mean, it's just a great environment. And I always talk about that. It's just, even when I'm not active there, there's just people that I just don't know how to put it into words. It's great for people that or for new members and for new traders that want to get into trading. It's a fun environment, it's a safe environment. So, you don't get judged on how big your account is or your mistakes. It's a networking group. It's a group that you're supposed to talk about your mistakes and your best practices. So the larger we grow, the more mistakes we make, the more best practices we have, um, and the more we learn, as a whole. So that's the whole idea, so we can continue to grow together and make the least amount of mistakes. Um, Very proud of the group and how it's been doing. We've been kind of growing in certain different aspects. But yeah, that's pretty much it. If you guys have any questions, you guys have the links down below. If you guys haven't watched one of our newest, I guess, car videos, it's the 2017 GTR. Which I went ahead and I made an offer for it just because I was selling this to see if they're going to accept it. So you can actually watch that video down below. It's one of the newest ones that I've uploaded. So thank you guys again so much for watching. I hope you guys have a great Sunday. And let's make sure we start this week, on a positive note, with a green day. And, you know, again, stay disciplined. So you have to be kind of like a computer when you trade. So make sure you only trade stocks that have 10% profit margins, setting stop losses to secure your gains, and then not holding overnight. Although even if you think it's going to go up, like realistically, you can't have any emotions when it comes to trading. So thank you guys again so much. I hope you guys have a good Sunday and take care.